Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll do one question of working capital where we are required to calculate cash bank balance, that is one of the current asset, in a different way, that is based on net working capital. How it can be calculated and how it should be presented, that will be understanding in this question. Let us go through the question. You are required to prepare statement showing the working capital required to finance the level of activity of 12,000 units per year from the following information. Raw material are in stock on an average for 2 months. Material are in process on an average for half month. This is information for calculation of work in progress stock, current asset. Finished goods are in stock on an average for half month. Credit allowed by suppliers is 1.5 month of purchase of raw material, that is current liability, and credit allowed to debtors is 2.5 month, this is debtors current asset. Lag in payment of wages and overheads is 1 month. Creditors for expenses will be part of current liability. Cash and bank balance is expected to be 10% of net working capital before considering the cash bank balance. Here this word is important, before. Activities are spread evenly throughout the year. Cost per unit: raw material 10 rupees, wages 5 rupees, total cost 30 rupees. Profit is 20% on sale price. Here we have raw material of rupees 10, wages 5 rupees, total cost 30 rupees, profit 20% on selling price. Here raw material we got 10 rupees, wages 5 rupees, total cost is 30 rupees. Means here we can get missing information of overheads as a balancing figure. Total cost 30 rupees minus 10 rupees of raw material minus 5 rupees of wages. That means balance 15 rupees is of overheads. Thereby we get total cost 30 rupees. Profit 20% on sale price. We don't have sale price here, we have total cost. 20% on sales, that is 1/5 on sales. So we are required to calculate on cost. So 1/5 on sales, will deduct 1 from denominator, will get 1/4 on cost. If we have profit rate on sale price, we can deduct 1 from denominator to arrive at rate of profit on cost. That means 1/5 on sales, 1/4 on cost, 1/4 on sales, 1/3 on cost, 1/3 on sales, half on cost. So here 20% means 1/5 on sales, that is 1/4 on cost. So we'll have to take 1/4 of 30 rupees, that will be our profit. It comes to 7 rupees 50 paise. To total cost we'll add this profit. Finally we arrive at sale price 37 rupees 50 paise. So we got here basic calculation of cost. Raw material 10 rupees, wages 5 rupees, overheads was missing figure, we calculated that 15 rupees, total cost was given 30 rupees. Profit we have calculated based on cost, it was given on sales, we have converted it. So finally selling price we got 37 rupees 50 paise. Here most of the information we have on monthly basis. Level of activity 12,000 units per year is given, so we have to convert it on monthly basis. Per month output is, we can calculate by taking per annum output 12,000 units divided by 12. Per annum we have 12,000 units divided by 12. It is 1000 units per month. That is what calculation we get. Raw material per unit 10 rupees multiplied by per month units 1000. Per month raw material requirement is 10,000. Wages per unit 5 rupees. Per month units 1000. Amount per month 5000. Overheads 15 rupees per unit, 1000 units 15,000. Overheads 15 rupees 1000 units 15,000. Total cost 30 rupees per month 1000 units will be 30,000. Profit 7 rupees 50 paise per unit, 1000 units 7,500. Sales 37 rupees 50 paise per month unit 1000, total 37,500. Raw material are in stock on an average for 2 months. Raw material per month 10,000. Raw material per month 10,000 multiplied by period is 2 months. This will be current asset. Materials are in process on an average for half month. This is information for work in progress stock. Raw material per month 10,000. Raw material per month 10,000 multiplied by period half month. It's 5,000. Wages 5,000 per month multiplied by period half month multiplied by 50%. It is 1,250. Overheads 15,000 per month. multiplied by period half month multiplied by 50%, 3750. So work in progress stock total is 10,000, will be part of current asset. Finished goods are in stock on an average for half month. Stock of finished goods half month. Total cost per month 30,000. Total cost per month 30,000 multiplied by period half month. So it will be 15,000 current asset. Credit allowed to customers 2.5 month. Information of debtors. Sales per month multiplied by period. Sales per month 37,500 multiplied by credit period allowed 2.5 month. 93,750 current asset. Credit allowed by suppliers 1.5 month of purchase. Creditors for goods. Per month raw material purchases required 10,000. Raw material per month 10,000. Credit allowed by suppliers 1.5 month. So creditors for goods 15,000 will be current liability. Lag in payment of wages and overheads is 1 month. Wages per month 5,000. Creditors for expenses 1 month, that is wages for 1 month. Wages per month 5,000 multiplied by period 1 month. So it will be 5,000 current liability. Overheads per month 15,000. Overheads for 1 month. Overheads per month 15,000. Credit period 1 month. So it will be 15,000 current liability. Now we'll discuss final answer, that is estimated working capital statement. We are required to first list current assets. There we have first item inventories. In inventories first item we have stock of raw materials. We have already calculated this as working note. Stock of raw materials for 2 months amount is 20,000. Stock of work in progress for half month we got that 10,000. Stock of finished goods for half month we got 15,000. Debtors we have at sale price for 2.5 months 93,750. Total current asset, that is gross working capital, we got 1,38,750. From this we will be deducting current liabilities. Creditors for goods 15,000. Creditors for expenses, wages 5,000, overheads 15,000. Total current liabilities we got 35,000. So from current asset we'll be deducting this total current liabilities. So net working capital we got 1,03,750. We have calculated net working capital. Cash bank balance is expected to be 10% of net working capital before considering the cash bank balance. That means without considering cash bank balance. Here we have calculated net working capital without considering cash bank balance. Now we'll be adding 10% of this net working capital as cash bank balance required. Net working capital before cash bank balance 1,03,750. To this we have added cash bank balance 10%, 10,375. So final working capital we got 1,14,125, which will be called as estimated working capital to be arranged for. In this question we have understood how cash bank balance we can calculate on net working capital as per given in the question without considering first cash bank balance. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.